Hello and welcome to the look ahead for Wednesday, the 17th of September with me, Fiona Cincotta, Senior Market Analyst at City Index. So the main show in town this week is the Federal Reserve interest rate decision, which will be coming out tomorrow. We'll be expecting the Federal Reserve to cut interest rates by 25 basis points down to 4% to 4.25%. Now, this is pretty much fully priced in after we've seen that weak jobs data, from the US in recent weeks. We saw the weaker than expected non-farm payroll. We saw the downward revision to the payrolls through to March 2025 for the 12 months prior. We saw jobless claims at almost 4-year highs. So plenty of weakness starting to show up in the jobs market. Yet at the same time, inflation remains a little bit sticky. And also today we had retail sales, which were stronger than expected at 0.6%. However, I do think potentially that there is some forward early buying, should we say, by consumers to avoid sort of Trump trade tariffs, price increases, which may have been fueling that. But even so, the consumer does seem to be pretty resilient despite signs of slowing growth. So what are we going to be watching as far as the Fed is concerned? The rate cut is fully priced in, so it's going to be much more on the projections than on the dot plot. Now, the market is currently pricing in around 70 basis point worth of cuts between now and the end of the year. Now, the Fed in the dot plot back in June guided for 2 rate cuts. The market's going to be watching to see whether that dot plot gets changed in order to increase the rate cut expectations by the Federal Reserve. So that's what we're going to be watching, obviously, along with growth forecasts and inflation forecasts and how the Fed sees the current situation feeding into the outlook for the US economy. Now, what does all this mean for the euro US dollar? Now, this is quite an interesting one. We're seeing the euro US dollar break out to fresh 2025 highs ahead of tomorrow's rate decision. Now, this comes at a time when the ECB really starting to look as if it may have actually potentially ended its rate cutting cycle. So that divergence between the Fed and the ECB is really supporting the euro US dollar. We had data out of Germany as well today. The ZEW economic sentiment stronger than expected, although the current situation was slightly weaker. But as I said, ECB, Isabel Snabel, policymaker, spoke yesterday, really raising questions over whether the ECB needs to cut rates again further, given that inflation is at 2%. And for now, growth is weak, definitely weak, but its PMI data is coming through a little bit better. So maybe things can start to turn around. As far as what to be watching, euro US dollar broken above this level here, which is the July high, 2025 high. A lot of this is on US dollar weakness heading into that rate cut. So if we do get a little bit of a disappointment from the Fed, in the sense that they are a little bit more cautious with the rate cutting projections, or as far as the Jerome Powell's comments are concerned, then that could see the US dollar rein in some of those recent losses. But otherwise, 120 is the level I'll be looking for on the upside going forward. May see a little bit of consolidation, but that is the level that's going to be next in line for the bulls. And then as far as support is concerned, as I mentioned, that 118.30 on the downside. And then we've got below that the 117 level. That's the falling trend line support, and also the round number. Really, as we get below sort of around the 115.90 level, that's when we'd start to see the structure of this chart change. Other things we're looking out for, let's just take a look at US stocks and how they're behaving ahead of this rate decision. Look, trading at record highs. The NASDAQ, it's up again today. I think it'll make it its 6th or 7th straight session. Record high of 24,385 was reached today, despite those stronger than expected sales, which are unlikely to deter the Fed from cutting rates tomorrow. So as far as levels to be watching on the upside, looking for the 24,500 as the next target ahead of 25,000 psychological level. Levels to be watching on the downside, 24,000. That was the high that we saw back in August. And then below that, you've got the 23,500. Just taking a quick look at gold as well. Gold trading as well at record highs, rose to a peak of 3,700 today, or just above 3,700 today, as we've seen this phenomenal breakout. As far as levels to be watching, 3,800 is going to be the next level on the upside, which will be the logical target. We are very much in overbought territory, though, so buyers should be cautious at these levels. There could be some consolidation or a pull lower before further gains. Just as far as levels to watch on the downside, you've got 3,615. That's the weekly low to be watching out for. And then below that, you've got the 3,500 level, which was the high that we saw back in April. So I hope you have liked everything that we've spoken about today. And if you do, then please do give this video a like. And for more videos like this, please do subscribe.